Good morning and welcome to Stock Market Today. It's Tuesday, September 10th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email so you can follow along with this show. You'll get daily stock ideas for you to consider in your inbox every trading day before the market opened. So U.S. equities were mixed in Monday's trading, but the big story was the rotation out of momentum and into value as investors sold off the market leaders in favor of the groups that have been underperforming, such as energy and financials. Treasuries were weaker across the curve. The dollar was stronger versus the yen, but weaker versus the euro. Gold settled down 30 basis points. WTI crude finished up 2.4%. So your leaders yesterday, energy, fins, discretionary, and industrials. Your underperformers, REITs, healthcare, tech, and utilities. And as we get to the desk this morning, futures are down about 20 basis points to start the day. Asian markets were mixed overnight. China underperformed while Japan led. European markets are trading lower. Treasuries are weaker following the rise in yields yesterday. The dollar is stronger on the major crosses. Gold is down 50 basis points, and WTI crude is adding on another 40 basis points to the upside. So if we take a look at the S&P 500, we're holding above the breakout level, above 2950. And the support zone that is now between 2900 and 2950 is still in play. RSI continues to move higher after a series of higher lows, and Chaikin money flow does remain bullish. Now, resistance is in the area of 3,000. Everybody's got the psychologically important round number in their head at 3,000. And then above that, the July highs at around 3,030 for the S&P 500. But really, the news yesterday was this shift out of the leaders and into the laggards. The top 50 stocks in the S&P 500 were down on average about 1.5% yesterday, while the bottom 50, in terms of, and this is in terms of performance year to date, the bottom 50 were up over 3%. So a big momentum shift. One day does not a trend make, but obviously something we want to continue to follow closely. Your market in a minute. Stocks start the week mixed at the index level. Right? The indexes were mixed. But under the surface, as I said, investors sold the recent winners and bought the laggards. Backup in yield has led to some profit taking in the bond proxies, and we think it's too soon to call a turn in energy. We looked at the energy chart yesterday during this show. Futures do point to a slightly lower open here today. Taking a look at the power bars now across the major indices, the Dow back to even, 6 bulls to 6 bears after a 19 basis point rise yesterday. S&P 500, call it flat, 119 bulls, 85 bears after a flat session. NASDAQ underperformed as the Momo names were sold off, 23 bulls to 17 bears. Small caps, right? Market bought the losers yesterday. Small caps have certainly been relative losers. Small caps, big outperformance on the day, up 1.34%, 522 bulls, 355 bears. We sold off the bonds to send yields higher. And energy, again, a lagging sector, right? Just some sort of rotation took place under the surface yesterday that now we want to keep an eye on. Energy added 2% yesterday, but we'll note that the power bar ratio is still skewed greater than 3-to-1 in favor of the bears. At 16-to-5. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish, but the major markets are mixed. Let's take a look at our stock of the day now. Reinsurance Group, RGA, closed at 158.22 yesterday, up 1.5%. So nice outperformer. This stock, RGA, has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong price volume activity, and positive expert activity. And when we take the 20 factors, 5 in each of these 4 categories, we come out with our very bullish rating. So for those of you who have been following, you know we've been bullish on insurance. It's a strong industry group. Here we have a strong trend with the stock above the rising long-term trend line. Market and model, though, and that is a technical term. But just kind of an inline performer. Now, we've gone from underperforming to slight outperformer, back and forth, kind of straddling that line. Let's just call it an inline performer. On top of that, the stock is overbought based on our indicator. Chaikin money flow is bullish, so that's a positive sign. But for me, I need to see more here. I need to see a better setup for me to get excited about a name like RGA. I need to see better relative strength first and foremost. And I also need to see the stock closer to an oversold reading and not on an overbought reading, as that obviously increases your odds of outperforming and helps with timing of entries. We prefer them when they are oversold within the context of an uptrend. For all intents and purposes right now, this stock is overbought within the context of a flat to slightly rising trend, and it's not really outperforming the market. So we're going to add this one to a watch list. Obviously, we don't want to let the opportunity go by. We'll keep an eye on it, and if relative strength improves, and if the stock begins to shift back to an oversold position, then perhaps it becomes more compelling. We'll add it to the list, and we'll keep an eye on it. I think you should do the same with ticker symbol RGA. Let's take a look now at our sector movement over the last 5 days via our sector tracker. And if you look at the top of the list, energy and financials. After big moves yesterday, these have been lagging groups. If you look at the relative strength, and that's what we do every Tuesday in my note to Chaikin Analytics clients, we look at relative strength within the marketplace, and energy and fins have certainly been areas of relative weakness. But yesterday, the market decided to buy the laggards. Energy, top of the list. Financials, top of the list. Discretionary hasn't really been a laggard if you look at it on the group level, but a lot of that is it's very top heavy within that group. Comms, industrials, and tech, middle of the road. And here are your underperformers: staples, REITs, materials, utilities, and healthcare. Now, staples, REITs, and utilities have been your big outperformers year to date. So there was some profit taking in those groups. Also at play, especially within the REITs and the utilities, has been the back up in yields over the past few days, having a negative impact there. So profit taking in the areas of the market that have been outperforming. Taking a look at our industry and focus now, though, and this is one of my favorites as an analytical tool, semiconductors, right? Over the past 6 months, this group has outperformed the S&P 500 by 8.85%. Its power bar ratio hints that that's likely to continue. 8 bullish or very bullish stocks, only 4 bearish or very bearish stocks. Group's currently ranked in the middle of the road, 10 of 21 subsectors, but it has moved up 5 slots over the past week. Why do we care? Because there's a positive correlation between the relative performance of semiconductors against the S&P 500 and the S&P 500 itself. And when semis are outperforming, that's generally a bullish sign for the market. It's a big part of my analytical process. So some of the indicative semiconductors names that might be worth a look if they set themselves up: Qorvo, QRVO, very bullish rating; Diodes, DIOD, very bullish rating; and Rambus, RMBS, also has a very bullish rating within Chaikin Analytics. And if we take a look at the ETF, the equally weighted semiconductor ETF, XSD, the Spider S&P Semis Fund, you can see a bullish power gauge ETF rating and a strong trend, right? But for us, what really matters is this right here: relative strength against the S&P 500. When the semis are outperforming, the market itself tends to move higher. When the semis are underperforming, the market tends to be under pressure. Correlation across time frames is positive. So we have a bullish stock fund outperforming the market. Now, I don't love the bearish money flow up here near the highs. Stock is neither overbought nor oversold. I'm sorry, the fund is neither overbought nor oversold. It is above a rising long-term trend line and threatening a breakout. For us, obviously, we want to focus right here. If semis continue to outperform the market, that carries bullish implications for the market itself. And we'll continue to monitor that situation because they've been outperforming. So if this really is the start of a trend out of the winners and into the laggards, we'll see if they start to sell semiconductors. We'll see what kind of impact that has on the marketplace. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. And you can see the gainers side of the board has 3 names from a very beaten down area of the market. Helmerich & Payne has a very bearish rating. Stock was up 8.5% yesterday. Oil's been rallying over the past couple of days as well. This has been a laggard. Money rotated there. National Oil, well, Varco, it caught an upgrade last week, and now same theme as Helmerich. Oil stock, buying the losers, stock up 8% on the day. L Brands, no real company-specific news. Again, it's been a beat-up name. I will highlight, though, that they do have an analyst meeting scheduled for today. HBI, I didn't see anything to send that stock higher, up a little over 6%. And Concho, some news there as well as just being a beaten down name. Concho is also selling some assets, so that sent that stock higher by 6.5% on the day. On the loser side of the board, MKTX, no real news to take that one down 11 0.85%. IDXX was initiated with a neutral rating. Stock lower by 7.4%. Roper, no real news, down 4.8%. Regeneron, didn't see any real news on that name as well, down a little less than 4.5%. And PayPal, obviously one of the big momentum names, down 4.2%. Profit taking in the winners. Now let's look at the themes. As we said, we've been talking about it now for the entire show. Investors sold the Mo yesterday. Here's the MTUM, the iShares MSCI US Momentum Factor ETF, right? And you can see that it hit its head on resistance up here just below the 124 mark and made a strong move lower. All right, let's put it in context, though. We still are above support at the 118 to 120 level, call it 119, and above a rising 200-day moving average. The RSI has held at 50 for now. So obviously the same type of analysis that we do on the S&P 500 applies here. We want to see a consolidation above 119 that does not produce an RSI reading much below 40. If that's the case, it increases the odds that support is going to hold and that momentum is likely to carry through to the upside. Now, on an absolute basis, on a trend perspective, we have broken, so we have to be open to the idea that there could be a false breakout at play. It's something that obviously we're going to watch on a relative basis against the SPY, right? Here's MTUM relative to the SPY. We had a breakout, and obviously with the sell-off yesterday in momentum stocks, we've pulled back below the breakout level. So as I said, one day does not make a trend, but obviously this is a new development, and it was somewhat extreme the way they bought the laggards and sold the leaders. So obviously it's something that we are going to want to keep an eye on, right? Now, fully on my radar screen. We'll see if it continues to play out or if it was just a one-day program type rebalancing. Hard to tell at this point. We'll give the benefit of the doubt to the existing trends for now, but obviously we do not remain dogmatic in our views, and we will continue to monitor. REITs under pressure as rates back up. Also some profit taking here. Here's XLRE relative to the SPY, pulling back slightly below the breakout level, but holding above the 200-day moving average for the ratio. RSI so far holding in bullish ranges and still a nice steady uptrend on an absolute basis. So again, if the market is going to turn around and sell the winners, obviously, if that's going to be an enduring theme, we could see some more pressure here. We're going to keep an eye on it as well. Rates have backed up. We've been talking about the 10-year. We showed the chart yesterday on this show. As rates back up, obviously your bond proxies are likely to come under pressure, right? They rallied when rates were falling. If rates are going to rise here in the near term, we'd expect to see some profit taking within those bond proxies. Real estate is a bond proxy. Again, I think it's too early to call a turn just yet. This is still a steady uptrend on a relative basis, a steady uptrend on an absolute basis, and relative momentum based on the RSI still holding bullish ranges. Tech holds the relative breakout as well, right? If we were going to rotate out of the big winners and out of the momentum, you'd expect tech to sell off. But so far on a relative basis, XLK relative to the SPY is holding the breakout level for now. Now, I'd love to see a little bit more upside from the RSI, but here as well, we're holding within bullish ranges, lending a momentum confirmation to the trend higher here for the most part for XLK on a relative basis. On an absolute basis, tech continues to hold the uptrend, testing the July highs here, right? Slight consolidation, but continuing along the path of its uptrend. So again, we're going to defer to the trends for now, but obviously we're going to keep an eye as to what's happening. And then finally, will the fins break the trend, right? If falling rates is good for the bond proxies, it's been bad for financials. And you can see financials relative to the SPY, a nice steady downtrend below a declining 200-day moving average. All the while, the RSI cannot become overbought, routinely becomes oversold, and stays in bearish ranges. Now, we've had multiple tests of a declining 200-day moving average, but will the fins finally break the trend? We don't know. If rates continue to move higher, odds are that the financials will break this trend and start to move higher. But if this is just a counter trend move in rates and they are going to head lower, then I would expect the fins to also head lower. On an absolute basis, the financials remain below resistance as they push up here near the July-August high. So that's going to wrap it up for today. Head over to chaikinanalytics.com/today to sign up for that email. I'll be back here tomorrow.